Perhaps it's worth taking a step back and why we believe quality investing works. And really it comes back to the fact that the market often systematically underappreciates the returns from high quality companies. So when you think about high quality companies, they have fewer tail risks, they have much more sustainable and predictable earnings profiles. And the other side of it is that they're able to take advantage of opportunities in markets because they are more conservative. So when the opportunity arises, they can be more aggressive from that point of view. So that's why we believe it works, and we've proven it works through the performance of the funds. But what we do, and again, I appreciate quality can be quite an obvious term in our industry. For us, we're very clear about what it means, and we've got a very clear framework around it. And I tend to think about it in 5 levels. The first is the industry structure. So we're looking for, what are the barriers to entry within an industry? Who are the players? Who's got the market share? Is it right for disruption? Is it not? The second thing is the business strategy itself. So how is this company playing into that industry? Are they the disruptor? Are they being disrupted? Do they have the market share? Then we look at the management team, and are the right people in place to execute on that strategy? So we look at things such as track record, what they've done in previous roles, and their alignment. The fourth thing is financials. So we spend an inordinate amount of time dredging through financial statements and really understanding the risks around the financials. We've always, not just in the current situation, brought off balance sheet liabilities back on balance sheet because they are liabilities at the end of the day. We look at cash flow, probably in a lot more detail than we do earnings. And then the final pillar to our quality filter is ESG. So we embed ESG across the entire investment decision-making process. So from idea generation through to research, through to portfolio construction, it's there at every level. So that's kind of the way we think about quality. And if I can flip it perhaps another way, or another way to think about it is we look for the mispricing in quality. And that's the quality of earnings, assets, and franchise. So if I think about assets, what are the assets of a business? It's the ability of fixed assets, intangible assets, management teams, customer relationships to generate a return. If I consider earnings, what is the quality of the cash flow generation? Is it lumpy or is it quite sustainable? And then the earnings power over the long term. And the third thing is the franchise itself. So is there a moat? Are there barriers to the business, which means that the return on invested capital can be higher for a longer period of time?